The agreement between the United States and Iran has helped calm oil markets, with crude prices retreating as investors anticipate a gradual return to normal trading conditions. But while futures market can reprice almost instantly, the physical oil market often moves much more slowly. Inventories remain low, shipping flows are still adjusting, and key market buffers have been depleted. So, is the oil market entering a period of normalization or simply transitioning into a new phase of rebalancing? I'm Johanna Botta, and joining me today to discuss the outlook for oil markets and the key developments investors should be watching is Alex Hodes, Director of Energy Market Strategy at StoneX. Alex, it's great to see you again. It seems like the futures market appears to have welcomed the U.S.-Iran agreement. Is the market pricing in normalization faster than the physical market can actually realistically deliver it?
So there has been quite a bit of repricing over the past several weeks, and this was in response to the signing of the MOU between Iran and the US. So there are actual physical flows that are
Yeah.
returning right now, and those flows are returning honestly quicker than most analysts initially expected, with some people reporting almost 7 million barrels per day
Oh,
flowing back through the Strait, which is about 40% of what the pre-war flows were. So really the market is kind of adjusting there.
mhm.
And you're seeing some of the Asian buyers that essentially had sat on the sidelines and they had kind of stocked up ahead in expectation for this
Yeah.
conflict to continue. So they are still kind of on the sidelines. And now you're seeing that repricing to kind of get that excess crude out to other buyers. So that weakness is actually being reflected in the physical market as
Okay.
well. You're seeing physical differentials soften quite a bit. You're seeing the backwardation in
Yeah.
crude oil flatten substantially. So there are signs of the physical markets softening, as well as just that headline announcement and the peace deal that's taking place.
Okay. If hostilities do ease and Hormuz remains open, which is big if, but hopefully, what are the practical hurdles that still stand in the way of a full recovery in oil flows?
So I think a lot of the ships and ship owners are still going to be somewhat hesitant
Hmm.
to pass through the strait. So if these insurance rates, they will need to come down for these ships to actually go through there. We have seen a lot of the initial barrels that are going through this are Iranian barrels.
Hmm.
So you're kind of seeing them kind of take the lead, but we have also seen Saudi Arabia, Kuwaiti, barrels passing through the strait as well. There's going to be some hiccups along the way, I would imagine. And any if these peace talks kind of go sideways and any holdup in this deal, that could be a potential risk moving forward. One of the big sticking points of the discussion was that there would be peace in Lebanon, and
That's still
there
a
have been
sticking
reports
point. Yeah.
that there is this military action is still taking place. So that will be a big sticking point in the deal, along with the funds for reconstruction in
Hmm.
Iran. So I think this is something that's going to be continuously needed to be monitored. But right now, what really matters is how many ships are passing through the strait.
Yeah.
And we've seen some sense of normalization there. I
Okay.
would imagine the biggest hesitation is going to be the ships that are transiting from the east to the west into the strait will maybe be a little bit more hesitant than those tankers that have been stranded
Are
in the
leaving.
Persian Gulf
Yeah.
for months on end. So they will be kind of exiting the strait, but the big question will be entering back into the strait or passing back through the strait, and where they're able to pick up those barrels and get those Middle Eastern production back online. So they still need to clear off this excess storage capacity. And that's going to be kind of the first step. And that's, I believe, what we're seeing right now. We're going to see this big impulse of all these barrels kind of leaving there. And then we're going to somewhat normalize eventually over time. And I think that that's when we're going to see kind of a steady state reached at some point. But we kind of have this 60-day time horizon between Iran and US to kind of walk through some of those points, those talking points.
Hmm.
And there's a lot of points there that have been kind of red line in the sand
Yeah.
for either side. However, it's kind of showing that both Iran and the US are willing to talk and want this peace to last. So that's kind of half of the battle right there.
Exactly. It's different from past times. I think this is the longest they've gone with actually both, giving us the same sort of information as to the outcome of the peace deal. During the disruption, inventories became one of the market's most important shock absorbers. And as we've discussed several times, I think it was even last week. So, what happens when countries, refiners, and traders start trying to rebuild those inventories?
Yeah, I think that's the big question here. The one biggest factor is going to be China itself.
Hmm.
They had really been kind of a shock absorber in the market.
Exactly.
They had been withdrawing down on their inventories. Allegedly, we don't really have as much of clarity or visibility on that end, but we've seen them take in a lot fewer barrels of crude oil with regards to imports in May. And the preliminary data that's coming out of China is showing another weak importing month as well. So our models are pointing to 9 million barrels per day of imports in June, which would be even lower, slightly lower than May numbers. So that is just a forecast for what we're expecting June levels to be, but you've seen them kind of really put the brakes on their buying. And so the question will be, at what point are they going to step back into the market? And you're kind of seeing that reflected across the rest of the globe as well. So although now we're seeing those lower prices, so I think you're going to start to see more people kind of step back into the market to refill those inventories.
Hmm.
However, some of the Asian buyers allegedly had already had their kind of demand for June and July set,
Right.
so they're not really in any need to step up to the plate right now. However, we have had discussions in the US. We're still seeing inventories very tight. So it's basically at what point are you going to start to see them step back in? And usually the market psychology is that after you see that dip in prices, that's not really where the buyers step back in.
Okay.
But once prices start to move back higher, then
Right.
you're going to start to see people kind of be like, okay, we need to jump back in before this gets ahead of ourselves again.
Exactly.
So I'm thinking that there's going to be kind of some more price action downward.
Hmm.
And then when you see prices start to tick back higher, that's going to be the time when people start to kind of step back in, refill those inventories,
Jump
and
back
that's
in. Yeah.
going to provide almost a floor in the market, in my opinion.
I think it was last week, maybe it was a week before, I don't remember, I'm sorry, but we were talking about inventory levels being low at Cushing. So, how important are inventory levels during a period of market normalization?
So I think it's really just provides you a buffer there. So
Mhm.
the question is, and you're kind of seeing it right now in diesel specifically.
Yeah.
Diesel has been very, very tight across all the products. So you've seen the most reactiveness in diesel pricing more than anything else. So I would say that it's kind of that shock absorber there. And while you're refilling those inventories, if anything goes awry, you're going to see more price reactions there.
Yeah.
However, heading into this conflict, the US specifically had quite a built up quite a bit of inventory in advance of
Hmm.
this. So honestly, across the board, it depends on which product you're talking about.
Yeah.
Some of the inventories are not as low as others. So in NGLs, so propane, we actually have very well supplied inventories there, so you're not going to see as big of a impact
Pricing.
there
Yeah.
in pricing. But really, the tightness is going to be diesel, and then gasoline inventories are tight, but the US is going to be able to kind of produce at a rapid rate there. You're not seeing as much export pull from diesel as well. So
Hmm.
some buyers have kind of stepped away from that market. So I think we're going to see that kind of normalization. And really, it's going to be helpful that the export numbers are going down and kind of refill those back up to normal levels kind of across the board.
Okay. Well, then tell me, if the immediate supply concerns are beginning to ease, what becomes a major next driver for the market, and where should investors be focusing their attention?
So we're kind of flipping from one supply disruption to another. So lately, we've seen Ukraine step up attacks in Russia,
Yeah.
and you're seeing just yesterday, we saw a headline that announced that Russia was contemplating diesel export bans.
Hmm.
So you're seeing some of these export bans kind of have their effect on the market. So Russia is a big distillate exporter. You saw in May that their exports were down 300,000 barrels year over year, which is quite substantial in the distillate space. And they implemented a jet fuel ban as
Hmm.
well. And then in June, we're already seeing export numbers coming in even lower than May. So
Okay.
you're kind of seeing more tightness in the refined product space than anything right now.
Hmm.
Crude is kind of normalizing first and foremost, and that was kind of the
Yeah.
anticipation coming out of this Strait of Hormuz reopening.
Hmm.
And you're seeing refining crack spreads still extremely elevated. Both gasoline and heating oil crack spreads are still around their historical highs. So that tells me that we are still in tight supplies on those refined product markets themselves.
Yeah.
And we're going to need to see those inventories rebuild. We're going to have a report here very soon that will show us kind of what the refined products are doing in the US today. So hopefully those trends start flipping into more aggressive builds, but it's going to be kind of a slower moving aspect than the crude oil pricing normalization, in my opinion.
Understood. Alex, thank you again for joining us and for all your insight. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.